Great. Welcome you all once again to the second section of the capital reduction, or the second phase of the intervention, day 2. And I believe strongly that we have to go through the day 1 and then the initial stage. We are going to pick a question called Malibu Limited. It's in the intervention kit and also in the handout as well. So let's go to Malibu. That's immediate next question. Malibu is in the intervention. So let's quickly run through. Yeah, this is Malibu. This very one. Malibu Limited. Malibu Limited. Malibu Limited is a question that we are looking after. Kindly be with us when I'm solving the question to get a full picture. Yes. Now, I'll go straight to the requirement before I deviate. So let's go to Malibu, the requirements. So requirement A, Malibu. Prepare capital reduction account, stated capital account, and bank account. So for this, they've asked us specifically to prepare capital reduction account, stated capital account, and what? Bank account. Specifically, they have asked us to do that. So you have to do these 3 accounts. Any account that you have to open aside these 3, they are what? Workings. Requirement B, prepare statement of financial position of Malibu Limited after the reorganization. So here to be statement of financial position, Malibu Limited after what? Reorganization. Just after reorganization. Then C, identify any 3 reasons for which a company may opt to carry out capital reduction scheme. Why do you have to revive the business? So that you will not go in for liquidation. Maybe it is 1, to save the company from liquidation. 2, to raise additional funds. Good. Additional funds. 3, to restructure the capital base of the asset or capital base of the entity. So let's jot them down. Why do you prepare capital reduction? We should know the main reason for the capital reduction scheme. 1, prepare capital reduction scheme to avoid liquidation. So to avoid liquidation. 2, to raise funds. 3, to restructure the capital base of the entity to avoid bankruptcy. Anytime you realize that your debts are going high, in the company, please kindly prepare what called the capital reduction. Okay. Good. So basically, we need a capital reduction scheme to avoid what? Liquidation. To raise some funds, we need a scheme to also restructure the capital base. If we're a company that debt is increasing every day, if you don't take one time and design a scheme to restructure your capital base, a time will come, this debt will be more than your assets, and then you'll be declared bankrupt. So take note of that. This is reasons for what? Capital reduction scheme or reasons for reconstruction. Then this we can also have reasons for liquidation. Yes. Give us 3 reasons why this company must liquidate, not to continue business. First, if liquidation is what? Cheaper. If liquidation is what? Cheaper, that company should liquidate. That's the loss per liquidation. If it's cheaper, that company have to do what? Liquidate. Then we can also state that you have to liquidate to free up some assets or some capital. Liquidate to free some assets. Let's assume that we are a construction company. Mainly, we have 2 portfolios. We construct buildings, roads, and other works. At the same time, we sell construction materials. Our main focus on construction, not the materials. So the issue is that we have had a lot of stiff competition in that of the selling. So we are going to sell the selling business so that we can free certain assets from there and use it in our construction. So liquidation normally favor those that want to free certain assets. For that, you now, in fact, sell the business and get your money back because you have locked up your money in that business. You wish you can get your money from it so that you can use that money for something else. The best option for you to go and liquidate that business, get your money, untie that money that you have tied it in that business for long. Get it, use it for additional and other investments, and then you are done. So that's the main reason for liquidation, where a company will push to liquidation, and then reasons for a company will push for capital reduction. So that is it. Now let's continue this game. Please, Malibu question, but it's a Malibu, and then we have to look at it very well together with the Argentine Limited. Okay. So we are done. So you go straight and open the account requested by us. So capital reduction account, set the capital and bank account. So as usual, our T account, we have to open all the T accounts, and then we have to so A, I'll do the A here. Then tell the examiner, first thing I'll do, capital reduction. Please here, open enough question because this one, it's a full question. So right after the requirement, I will set the tone. I'll not even read anything again. It's the tone that I'll set. They need capital reduction account. I'll make it big. If the examiner have asked me to do capital reduction, that means it will contain a lot. So I have to open a lot of brackets, a lot of space. So make it big. If you finish, there are more space. It's far, far better than it will not go there. And you'll be tempted to cancel. Write something to check one small. As if you are the one going to mark the paper yourself. You alone can read it. Examiner cannot read it. So make it big. Yes. Please, you don't want double account on a sheet. Don't do that. Double account. Even if your handwriting is very nice, you can do it. Please don't do that. Like your paper, your sheet is like this sheet. From here to here, you're going to squeeze it. Capital reduction account, like this. And then another one will come here. Capital ordinary shares account, also like this. Please don't do this. don't know this. That is why you pay for annual subscription. You pay for the exams. So take your time, relax, let the entire page fill one account. Entire page. So if it is ordinary share account like this. So that you won't be squeezing things. Because we are in for what? Tax generation and free marks generation. Association of what? Tax generation, free tax. And before you can earn it, it must be visible clearly. So let's take note of that. So I've opened the capital addition account here. Let me also open, in fact, let me also open ordinary share account here. I want to open all the accounts first. After that, then we proceed to prepare the balance sheet. So ordinary share capital account, OD. Ordinary share capital account. Okay. So what we have to do is this. They say bank account, eh? Okay, so bank. Then the next page is my balance sheet. Or if I like, these two guys will be the first page. This one's on the what? It's on the third page. Then the fourth page, my balance sheet. Yes. So if you do that, it's far, far better than squeezing, forcing yourself to create it there, but to not go there. So let's take notes of that. Okay, so I've opened the bank account here, and then I'm done. So right after the requirements, I will set the tone because I will answer it. Then let's go to the question. Let's go to the question. Hi, I'm good. So let's go to the footnote and start post the items. Now for capital reduction scheme, before the scheme will be accepted, the scheme must be fair. Fair and treat all the shareholders equal. So let's start. The footnotes start from the top. So let's start from the top. Question 3. Malibu Limited, producers of telecommunication equipment, has been making losses in recent times. The directors have proposed a scheme of reorganization to take effect on 1st October 2011. The statement of financial position of the company at 30th September is as follows. So financial position is there, cost, accumulated depreciation, net book value, everything is there. Let's go straight to the footnote then. Additional information. The ordinary shares are to be written down to 0.25 Ghana cedis per share. Obviously, there's a full stop there, or there's end there. So I have to do that first. The ordinary share are to be written down 2.25 pesos or 0.25 cedis per share. So let's go and look at the share price that they have in the balance sheet. So in the financial position, they have 400,000 ordinary shares, and each of them is going for what? 75 pesos. So they have 300,000 after multiplying. Now they are saying that because they are struggling, they should reduce that value from 0.752 written down to 2 means the final one, which is, so that means they should cancel off how many, or what's the proportion? You have to cancel 0.5. So let's go to the board. How many shares are they having? 400,000 shares. So that means on each share, we have to cancel something like this. Before, we have 0.75. But now, they say we should reduce it to 0.25. So that means we have to reduce it by 0.5. So this 0.5, will it be a gain to the company or a loss to the company? That's all. It will move from where? Ordinary share capital to who? To the capital reduction account. So let's go. So you value it by what? 400,000 ordinary shares.
It's a gain.
So it's a gain to the company. So on each share, they are what? The company will gain 50 because the company is what? Reducing it by 50 pesos on each one. So the gain element will be 50 pesos. So if we should end here on the balance sheet, whatever remains goes to the balance sheet, the two as a 0.25. So let's quickly do that. Let's go to the ordinary share capital and record it. As usual, to get it clearly, anytime we pick ordinary shares, we said that we have to bring their balances. You have to bring their balances. So let's go to ordinary share capital, then bring the balance. So what's the balance? It was 300. So right, this ordinary share capital, right? So balance brought down 300,000. Yeah, they've not raised any 3 zeros. So it's a full figure. So 300,000.
If they don't raise, can't we raise?
If they don't raise the zeros, please don't raise it. Unless it's a final account, don't raise it. If you've not raised the 3 zeros, don't raise it. Unless it's like a small workings that you're doing, like about 1 or 2, fine. If there are many, that means they have to convert the markets into CTS and then must pay the penalties. So you don't need to raise zeros where they've not raised it. Because solution to every question is the question itself. Now we have to reduce it. So 0.5 times 400, that will give us, so 0.5 good. So there's a question here. Someone said, is the company losing or gaining? Yes, the company will gain because now the value of the shares is 75. You said they should reduce to 2.25. So that means they have to cancel 50 pesos from each share. Each share they should cancel 50 pesos. And if they are cancelled, it's a gain, a plus to the company. But on the other side of the shareholders, it's a bad news. Good. So that is it. So we record it here as into bracket capital reduction. Do your workings. 0.75. Please do the workings here. 0.75 minus 0.25 times 400,000 shares. You get 200. So bring the 200,000 in it like this. Can you show the working? It's 0.75 times this. But it's not coming clear. So capital reduction. Open a bracket. Can you show the workings? Kindly show the workings. 200,000. I'll do the workings here. Can you show it on the face? Open a bracket like this. 0.75 minus 0.25 times what? 400. That is it. That'll give us 200. We are done with the first one, but left the second entry is here, right? Must go to capital reduction account at the gain side of what? The capital reduction. So right here, it's coming from where? Ordinary share capital. So ordinary share capital, 200,000. Good. So basically, that is it. 200,000. So we are done with the first part. Let's go and then continue the game. Again, they say something, and then to be converted into new ordinary shares at what? 1 Ghana cedi, fully paid. So now they say convert it to 1 Ghana cedi. No longer 25 pesos. It must be valued at 1 cedi. All what we are trying to say is this. If we have cancelled 200,000 out of the 300, left with how much? 100. That 100,000 shares, we should now value them at 1 cedi. So it means that to reduce the number of shares from 400,000 to what? 100,000. That's the implication. Yeah, that one will not have impact on the calculation. It will not affect the calculation. No impact. It means that now, if we should end here, the number of shares will not be 400,000. It will be 100,000. That's the implication. Why? Because now the balance level is 100,000 cedis. How do you get 100,000? We have 300 and we have sacrificed what? 200. Ordinary share capital. They have 300. We ask them to reduce it. So it has reduced by 200,000. So left with 100,000. This 100,000 cedi, we said that we should value them at what? 1 Ghana cedi. So if I divide this one by 1 cedi, how many shares will it buy? It can buy 100,000. So that now, currently, they have what? 100,000 shares. If we should end here, that's the implication. Okay. Now, we are continuing the game.
But how did you get like 300?
That's open balance. The 300,000 open balance, we pick it from the financial position. Good. Now let's go to note 2. Then to finish the game. Note 2. The preference shareholders are to receive 40,000 ordinary shares of 1 Ghana cedi each per share, fully paid in exchange for their preference shares. Wow. So here we are paying them with what? With shares. What will be the effect? So preference shareholders are to receive 40,000 ordinary shares of 1 Ghana cedi each. So the preference shareholders, they have to pick 40,000 ordinary shares. So all what you have to do is look at who is giving, who is receiving. Where are you moving it from? Which account is increasing? Which account is reducing? Good.
Ordinary shares is increasing. Preference shares is reducing.
Perfect. So ordinary share will increase, preference shares will reduce. And then you send it to the opposite side of each balancing. Now what you do is this. Let's look at the total amount that we are paying. So we are using 40,000 cedis because it will be 40,000 shares times the 1 cedi, right? That will give us 40,000 cedis. Good. That will be the 40,000 cedis. Perfect. Then let's go and check the preference shares. How much do they have with us? They have what? 100,000, right? So this 100,000, we are paying with 40,000. Wow. So we gain, you owe something or an investment of 100,000, we are paying it back with an amount of 40,000. So are we losing or we are gaining? Is the company losing or the company is gaining a little money? So how can you pay something costing 100,000, 40,000? So you are making a gain of what? 60,000. They say in full settlement, exchange, fully paid in exchange of their preference shares. So they should bring all the preference shares, surrender. So you give them equity shares of what? 40,000 cedis. So let's see how best we can look at this. Perfect. So the company will gain. So it must go to capital reduction, the gain side goes. So here, the account that we are going to open is between preference shares and what? Ordinary shares. So the preference shares will be a workings. So because they ask for these three, the preference shares will be working. So let me do the preference shares here, small one. Immediately go to the balance sheet and then record the opening balance. So preference share, the opening balance, that will be balance brought down, will be, they have 100,000 there, and we are paying them with 40,000 ordinary shares. So let's go to the ordinary share capital and increase it by 40,000. This is ordinary share capital. So we issue new shares of 40,000. So here we are using to pay preference shares. So it's going to preference shares. That's the source. So right here 40,000. You can show working. That is 40 times 1 Ghana cedi. So get the 40,000 cedis. Then immediately record it in the preference shares. So it should come and reduce the preference shares. So right here ordinary shares. Then I'll put the value here. It's coming from ordinary shares 40,000. When they're done, they say in exchange, whatever remains goes to capital reduction. So how can we pay something costing us 100 with 40,000? So that means we've made a gain of what? A gain of 60. So that 60 we recorded here. The name of capital reduction. So when you go to capital reduction account, if you go to where? The gain side. What's the gain side of capital reduction? Here. So right here, preference shares. Gains coming from preference shares. 60,000. Then you add done 60,000. So it means that the preference shares are balanced. In a new balance sheet, no preference shares, there's move. No preference shares, there's move. So it has balanced nicely. So the new balance sheet don't record preference shares. So they have settled. So we have settled them, and we should not have preference shares again. Good. So here, in short, they have settled or they have redeemed their preference shares by issuing ordinary shares of 40,000. So first, we have to record the 40,000 ordinary shares. Second, bring it to their preference shares. At the end of the day, whatever remains, because they've settled fully, we take it to what? That of the capital reduction. The difference, because we owe them 100, but we are paying 40 in full settlement. Whatever remains is a gain to us. That's why we carry the gain to the capital reduction as a gain. So that is it. So these are two corresponding entry. This is the one side, this is the other side. For this one, 40, this one side, this is the other side. And it has balanced nicely for you. Okay. Good. Okay, so let's go to the next note, one after the other. Then we are done. I hope everyone get it.
So this one is not capital surplus.
Okay, let's continue. Note 3. Note 3. Dividends on 7% preference shares are 2 years in arrears. Yeah, or 2 years in arrears. In consideration for waiving their right to the arrears of preference dividend to settle them, to sort them out, The preference shareholders have agreed to accept 10,000 new shares of 1 Ghana cedi per share, fully paid in final settlement of that value, in final settlement. So here we said that we cannot give a scheme without this particular note. So what do? He wrote 3 steps that we have to look out for, the long and the short. We like the short method. So he said that anytime you use the shares to pay for dividend in arrears, what do? First, get the total value of the shares you are giving out, which will be the 10,000 new shares at 1 Ghana cedis. So the value will be 10,000 by 1 cedi. That will give us 10,000 cedis. So this is how much you are giving them, irrespective of what? The dividend that you owe. And that is what we are interested in now. Because if you are counting the loss, now they are saying that they will recognize a loss of 10,000. That's the meaning. Upon all the dividend that you owe them, is 10,000 per day? No, because you are struggling. Good. So if the 10,000 that they know, then how much will be the loss? It's also 10,000. So step 2, immediately record it under the ordinary share capital as increase, because they are going to issue new shares to pay for. So that's the step 2. Then step 3, it's a loss to us. Dividend is supposed to pay 2 years ago, we are not going to pay it. So it's a loss to the company. Capital reduction loss, we are done. So that is it. So the steps are, step 1, find the total value, that total value of shares that you are giving them, the monetary value of the shares. We are giving them 10,000 shares at 1 Ghana cedis each. So multiply by this, you get what? 10,000 cedis. That's the first step you have to do. Step 2, record this in the ordinary shares account, because we are now going to issue it to increase ordinary shares. So let's go and record it. Ordinary share capital, here is it. So I record it here. In the name of preference dividend in arrears. So 10,000. Preference dividend in arrears, 10,000. Then 2. This is step 1. Step 2. Step 3 is the loss to us.
Would you show working?
Yes, 10,000 times 1 cedi. For the purpose of our 6th generation, let's show 10,000 times 1 cedi. And purpose of hunting for marks. Good. Then step number 3, it's a loss to us, because dividend that old dividend, we ask us to pay it now, so it's a loss. So it's good capital reduction account. Say that preference dividend in arrears. So preference dividend in arrears, which is 10,000. You are done. Fully sorted out. Then what do you do again? Move on to the next notes. So I'll move on. Here I'll not look at the long method. Let's take by the short approach. So the next note says that the creditors have agreed to take 100,000 new ordinary shares of 1 Ghana cedis per share, fully paid in part settlement of the amount due them. This one is part 2, not full settlement. So here we can't tell ourselves that the remainder of the creditors is the gain. No, it's a part settlement. So that means they will still come and chase us and take the part. So that means we are paying them 100,000, right? So we are issuing shares to pay. So first, the share capital have to be increased. So I'll add the share capital. Second, I'll subtract from where? The creditors. Because if I owe them 200 and I'm paying 100,000 with shares, it should reduce the amount that I owe them. So let's go and check the creditors, their value. Trade payable is 140. So you are giving them what? 100. So left with 40,000. So if nothing was said about it again, then in the new balance sheet, we will record 40,000 as well trade payable. But we have used shares to pay for what? 40,000. That's all. So let's go to the board and do the illustration. So first, I'll go to ordinary shares and write trade payable. Ordinary share capital and root trade payable 100,000. I rate trade payable 100,000. Here I'll not open trade payables account. I'll wait when I go to the balance sheet and I'll do it there on the face. That trade payable minus what? The 100,000. Good.
What if we should open it? What happens?
Yeah, you can still open it. Yes. And then we post the balance in. So it will left with the balance of 40 in that account. So you can still open it. Now let me take this account from there. All the account that has balance, I'll take them off. Preferentials are balanced. So if you want to open trade payables to be like this, trade payables. The open balance will be here. And that will be 140,000. And now we are paying them. So we have credited the share capital account with 100,000 there. You have to bring it here. Right here, ordinary shares, 100,000. So at the end of the day, the balance carried down will be here as what? 40,000, which will be taken towards the new balance sheet. So the same as you wait, when you go there, you just find the difference between 140 and this, then give you this as the balance carried down. Okay, good.
So that was the trade payable account.
Yes, trade payable. Okay. Let's continue with the next note. So note 4, right? Okay, that's note 5. Let's go to note 5. Note 5. Good. Note 5 says that the balance on the income surplus is to be written off. Whether that statement is there or not, you have to write it off. Have you seen Argentine Limited? They didn't tell us, but we still wrote it off. So whether this statement is there or not, you have to write it off, as long as it's negative. Good. So let's write it off. So let's go and pick it. We just have to send it to the loss side of the capital reduction. So income surplus is what? Income surplus. 160,000. So let's go and include it in what? The loss side. So 160,000 capital reduction. Income surplus 160,000. Good. Then let's continue the next note.
So that one is not a true. Yes.
All the items on the balance sheet must be treated once if you pick them. But the one in the footnotes like usually affect two items. Okay, let's go to note 6. Some assets of the company have been revalued and are to be incorporated in the account as follows. So these are the fair values. So let's compare them to the book value. Please, let's make some few changes. The book value, here you see PPE there. This one is not PPE. We call it, it's supposed to be freehold property. So if you get a hard copy, but make sure that before I issue the final copy out, all those corrections have been made.
So we cancel the whole thing and replace it with freehold.
Yeah, it should be freehold property, not PPE. So what's the current amount? The book value. The net book value is what? 80,000. Agreed. The net book value is 80,000. What is the fair value? Let's go to the footnote and pick the fair value. The fair value is 100,000. So is the company gaining or they are losing on that valuation? So a gain of what? 20,000. So let's go and key it in. So freehold premises, a gain of 20,000. So gains will come here. So I write freehold property into bracket. I do the workings. They do the workings. So 20,000. We are done. The workings. It will be 100,000 because of, okay, let me do it. 100,000 minus 80. Just have to find the difference. 100,000 minus 80. 100,000 minus 80,000. That's the workings. Okay. So let's check the asset one after the other. In the new financial position, kindly pick these values to the financial position.
There's a loss.
So plant and equipment, the fair value is what? 125. But let's go and see the book value. Good. So plant is 190. But on the fair value is what? 125. So there's a loss of what?
65.
Good. So loss of 65. So that one is plant. So I will call it a plant and equipment. Loss of 65. You should work it nicely for us. Okay, so the next on the list will be okay. The next one is vehicles. Fair value is 25. What's the book value? Book value is 30,000. So that's the loss.
Loss of 5,000.
So loss of 5,000. So vehicles. If you are working in there, you could answer here 5,000.
Inventory.
Then let's move on to inventory. Inventory, the fair value is 36,000, but the book value is what?
30. There's a loss of 1,000.
The inventory, the book value is 40, and then the fair value is 36. So there's a loss of 4,000. Good. A loss of 4,000. So inventory. Then you move on to the next one. The next asset on the list. Please, in the new financial position, you pick what? This fair value to be the asset values. The new balance sheet, kindly pick these values. So we are done with the revaluation. We go to note 7. An allowance of 3,500 is to be made for doubtful debt. So where will it go? Allowance of 3,005 to be made on doubtful debt. So that's a provision for doubtful debt. Provision for doubtful debt.
Okay. Receivable.
So will be gain or loss? Allowance. We are losing part of our receivables. So to be allowance or provision, which is 3,500. This is 3,500. $3,500. Then it will go to receivable. You take it off in a new balance sheet.
We didn't call here. We already said that we put
So don't forget to take it off from the receivable in the new balance sheet because you make some allowance. Now let's go again if you have any other item. Then note 8. The ordinary shareholders have agreed to inject additional 90,000 cash by acquiring 120,000 ordinary shares at 75 pesos per share, fully paid. Good. So how do you treat this? So 90,000,
names.
fact, the number of shares is 120,000 times 0.75 to give us 90,000. So over here, you just have to pick 90,000 because they've done it for us already. Good. So you have to pick it straightforward to the balance sheet. You check if the company is having a cash, you add it to it. The company does not have a cash, they have OD. It must be reverse the OD. Good. Let's see. Could the company have a bank balance? On the balance sheet, the company have a good balance of 10,000. So in they ask for bank account. So let's take opportunity and prepare the bank account now. So let's prepare the bank account. So let's go to the bank account. This is the bank account. So balance go down will be 10,000 at the debit side. And then they've issued additional shares of what? 90,000. So right here, OD 90,000 is going to ordinary shares. Now come to ordinary shares, so right here, bank 90,000. So they've issued additional one. So I'll pass these two entries 2 times, then you are done. Okay. Then we continue the game.
Now we can still show workings in it.
Yeah, this one, if you show workings, if I'm the one that man, I don't mind because there was that 90,000 was been given in the question already. So we can leave that 90,000 in there. However, if that 90,000 is not there, then we have to show the workings to tell the examiner how you get the 90,000. We can even multiply this.
I thought he brought it to confuse us in case we want to multiply the 90,000 rather by the 0.75 instead of the 120,000.
Good. The 90,000 is in Ghana cedis fully already. So 90,000 cedis. So they've got a monetary value. So we have to multiply the 120 by 0.75 to give you the 90,000. Great. Now the last footnote, we'll come to it. There's a question here. Let's go and pick the question. Good. The balance of the bank is at the left side because bank have a debit balance, so you have to bring that debit. Or let's go to the game. Asset is equal to equity plus liabilities. If you check this, assets, bank's an example of asset. Or check the balance sheet is part of the asset. So that means it must come to the left side. So left side, this side. So this is the T account. So this equal to represent the T. So if that item is here, it must be recorded there. Good. So that is why the bank we are putting on the debit side. Assuming that it was overdraft, OD, then it will be part of the liabilities. So now they are here, liabilities here. So therefore, we bring the balance here at the right side. If it is OD. Okay. So thank you. Let's go and pick the last footnote. The last footnote.
So the bank activity is 90,000.
The last footnote. Reorganization cost amounting to 7,500. So this one, will it be again a loss? The loss to the company is an expense, so we have to add it to the reducing side. So right here, reorganization expenses, 7,500. So as soon as you are done with the last footnote, then as usual you balance it and prepare the balance sheet. So let's balance it. After balancing it, we prepare the balance sheet. And we say now will be probably the end of today's section. Then I'll give a specific sections again, and we used a video to go through them, and then you are fine specifically.
We subtract it from bank.
Then the other corresponding entry, where will it go? Because it's a reorganization expenses, you have to pay, so it must go to bank. So it must go to the reducing side of the bank account. So go to bank and write reorganization expenses. Reorganization expenses because we will pay so 7,500 reorganization expenses. 7,500. Okay, so now let's balance all the accounts. Now let's know their balancing figures. Let's see whether the capital reduction will balance. It does not balance the difference. If it does not balance, then it should give us a good scheme. But all the scheme will be good because no one will sit down and design a bad scheme. No, we won't do that. Nobody will sit down and design a bad scheme. So if you calculate and then the losses are more than the gain, check your calculations. It will not happen. And that must balance, or the credit side must more than the gain must more than that. So we have a good scheme and then the other bad scheme. Okay, so how do you balance it? First, I balance the bank account. So I'll add all this side. I'll get 100,000. I'll get another 100,000 here.
Yay.
Then
Yeah.
I'll do it this way.
No, class.
Then you find the difference. So that's the balance carried down of 92,500. So in the new balance sheet, the bank account, the figure must be 92,500 in the new balance sheet. The figure must be 92,500. 92,500. 92,500. $92,500. Okay, so let's balance the one after the other. Which one should you go? If I balance any of them, you can give it to me so that we move on.
The first one is 280 and 255.
So let's balance the capital reduction, right? So I'll leave a space. So leave a space. Leave a space. Leave a space. So by all means, this had to be more than this. That is 280. 200 plus 60 plus 20, that's 280,000, right? 280,000. Then add all this side and then subtract from where? The 280. This side is 255,000. If you add all this side, you get 255.
Yeah.
So the difference between 255 and 80,000 is what? 25,000. And this is a good scheme. For the scheme have generated a surplus for us. So let's call it capital surplus. Capital what? Surplus. So in your new balance sheet, it must be there as capital surplus. That's a good scheme. It has generated a good balance for us. So that is it. Okay. Great. Someone requesting, what if you don't balance them in exams? In exams, if you don't balance them, you might not get the figures that you're going to use to prepare the balance sheet. You need to get these figures so that you to prepare the balance sheet. Good. So we need to balance them, at least some of them. So let's also balance the ordinary share account and let's start. Okay, so ordinary share capital. Now it's definitely this will be more than this. So I'll leave a line and then I'll come here I learned here is 540, right?
Yeah,
540,000. 540,000. So the difference between 540 and 200.
340.
So that's 340,000. And that's the balance carried down. We are done balancing all. So let's go and prepare the balance sheet. Now that we've done balancing everything, the new balance sheet balance nicely for us. So let's go and prepare. Kindly take notes of this. If you have not copied any section, kindly copy that. So I'll take it off. So let's continue the game. Let's prepare the financial position here. Uh, we need the balances. So when I call for it, then give it to us, all the balances. And in this question, there's no debenture. It's not like Argentina where there's debenture. Wow. I explained to you. A lot of stuff are used. So is there a difference between the first line and the second? Let's say it's a line. Good. Our first question that we saw for Argentina. Oh, it's a bit, it contains few stuff. The total marks was 7 marks, everything together, 7. But this one is around 20, 15. This one is about 15. Agreed everything. So this one is more demanding than the first one. This is a full section.
But it's basically
The same principle, the same approach, the same idea.
scheme. They have given us a scheme.
Good.
Yeah.
Okay, so let's go. Statement of financial position, Malibu. So statement of what? Financial position, Malibu. So Malibu Limited. Malibu Limited. So let's see here. First, Malibu Limited. Malibu Limited. This one, I think I sit down and write. So Malibu Limited. So statement of financial position just after the scheme. Don't forget the currency. First, we start with the assets. The assets, you just follow their format. If you're okay, if when you're entering into the exams room, sometimes all what you know the format, they decided to leave you and wait for you at the entrance. When you are done, you come back now, remember that, I should have write this thing. This ones. Yes, but if the format has vanished, then that means you have to use the format provided by you for in the exams. So that one have to just go to the question, look to their format that they've selected, and then use their format to do. When they move, you move. When they stop, you stop. Go by their format. Just don't pick the figures over there. Pick your adjusted figures and then the fair values. That's all. But if maybe the format, you still remember it, then you still have to go by it. For teaching the process, we will still use what? The format. So that the more you write, the more you remember. Let's start with non-current assets. Non-current assets. Good. We will call it non-current assets. Then we go and pick all the assets, the fair value. So it includes PPE, plant and equipment. In fact, this one must not be PPU, it must be freehold. The error, this figure here must be this statement. Let's go to the footnote and go and pick the fair value. So it is freehold property, plant and equipment, vehicles. So 100, 125, and 25. Perfect. Let's pick them here. Freehold, Let me call it 100, 125, 25. So this is freehold property.
You said freehold premises.
Okay. Then this is land and equipment. This is motor vehicle. You put them together, you get 250.
The vehicle.
Oh, okay, good. So that's vehicle. The vehicle is 25,000. So putting all together, non-current asset, we have what 250,000. We go to current asset. Go to current asset. So first inventory. I've also pick the fair value of the inventory, which happens to be 36,000, right? Or inventories. Inventories. Yes, 36,000. Good. Then the trade receivables. You open a bracket, minus the 3,005. So trade receivable, allowance of 3,005. So you have to take it from trade receivable. Now the trade receivable is 30,000 here. So we take off 3,005. So 30,000 less 3,005. That will give us 26,500. Then you go to bank balance. We've done it. So we have 92,500. The bank balance was 92,500. Then we go to total current assets. Then come to total assets. Total assets. Current assets will give us 500, 500, 130. So 156,000, right? 156,000 or 155. Okay, kindly give rates. So 155,000. Total assets will be 405,000. 405,000. Don't go on a line it. The next line, let's continue here. Equity. Ordinary shares. Ordinary shares is 340,000. So bring it at 340,000. Then the capital surplus. The capital reduction that is not balanced. That we say they've done very well by giving us a surplus of 25,000, right? So putting this one together, get what? 365,000. Then we come to liabilities. Which of the liabilities do we have? Current or non-current? In this case, you only have current liability. So current liabilities. The bracket trade payable. Trade payable to, we paid 100,000 out of the 140. So it was 140 minus the 100 that we paid them. That give us what? 40,000, right? So therefore, putting all this together, what do you get? So this and this, that's 405,000. So we are done. And that's the end of the game. So this is the game. So kindly just some few point down, and then I'll give some room for question solving, and then I will discuss the next section and then the areas that we have to look at for critical. Okay, so question time, understanding time. Great. Now, what's left is when we have to design a scheme by ourselves. That's what left. And that one, we will look at one particular video lecture section, and then we use that one be able to go through. I think last sittings on, we've looked at last sittings question. So we can revisit last sittings question, how we look at the solution. So I'll